All right, folks, back to work. And after a painful 24-hour flu bug, I am finally back to life and, of course, back to the action here on the YouTube channel. Now, we have a lot to talk about tonight because we have one of my favorite scenarios setting up right now. We had that big move higher to begin the week this week, and now this big move all the way back down this afternoon. That contrast, that big move to start the week and the big move lower midweek, that sets up really three specific types of setups we look for the following day. I want to cover each of those three setups because I have no crystal ball. I don't know what tomorrow will bring, but I want to make sure that you have a roadmap, a game plan to make some money on this stuff, no matter what the market throws at us tomorrow morning. So charts are ready. Enough of the intro. Thank you as always for joining me back here once again on the channel. Let's roll those sleeves up and go make some money on what should be another great day tomorrow morning. S&P SPYs all ready to go tonight. Nasdaq triple Qs are all ready. I have three very important clues on the charts right now that are telling us where I think the winning trades are setting up for tomorrow. One of those clues is right here on the hourly time frame. I like to use the hourly chart, the 60-minute time frame, to give us the best overall direction. And you can easily see the buyers are in full control right now on the hourly time frame. That is a very, very big clue, and that will make a lot more sense as we go deeper into this video. Second clue is over on the calendar for tomorrow. We get some news tomorrow morning. 8:30 is the durable goods orders, whole block of news there at 8:30 Eastern time. But let's be honest though, right? Does anybody care about the GDP report? No, everyone's listening in for tariff updates. So our second clue for tomorrow is we'll have our news feeds running tomorrow morning. Be keeping an eye out for more updates regarding tariffs. This is a very fluid, a very dynamic situation right now. So make sure you come out and join us tomorrow morning in our trade room. We'll keep up with those headlines tomorrow morning. So GDP at 8:30. But again, I would imagine everybody right now is waiting for the next update regarding tariffs. We heard from President Trump this afternoon talk about 25% tariffs on autos, and I'm sure these news headlines will keep going the rest of the week. Back to our charts though. First clue was the bullish overall move here on the hourly time frame. Second clue was the news for tomorrow. Third clue now is over on the tick charts, and this is really where it all comes together. Now, if you're watching for the first time right now, all of these tick charts, all the time frames in the upper left-hand corner, that is a 7,000 tick chart here on the S&P. And that yellow line right there, by the way, that is the 21 EMA. It's pretty much the only indicator we need to find winning trades each week. The final third clue, and it could be the most important clue we have on the charts right now, is this huge move going lower. Now again, think about this. We're bullish overall on that hourly time frame. That's going to give me my overall directional bias, and the contrast, that strong move going lower, that unlocks three types of trades or strategies or setups I'm looking for the following day. Let's cover each of those one by one because, as I said earlier, I don't have a crystal ball. I don't know what the market will do tomorrow, but I do know that one of these three trades are going to set up for us, and we'll make sure we are ready. The first one is, it's very important to remember that as we have this strong run down, all of that momentum going lower, the sellers are going to want to pull this back, retest that low before we resume that overall trend on the hourly, on that higher time frame. So one of three different scenarios I'm watching for tomorrow is to trade we call a retest trade. Now, trying to pick the bottom on these moves can be difficult. So I use a pattern called a crown reversal pattern to pick bottoms on these. Now, I always go half size position on trades like these because it may keep on going lower here overnight. What I want to see though is as this thing pulls back, I want to see bears try once, try twice. That way, I know where their stops are. Then, very important, what makes this a crown reversal pattern is I want to get below a prior swing, a strong green candle closing convincingly above that moving average, and that will be my initial entry on the pullback. Again, we call these crown reversals. They're basically a bear trap. Now, as we go higher, you know who's waiting up here. Sellers. We have all of that momentum. The bears are going to want to whack this thing and run that back down to retest the low. To do this now, what I'll do is wait for the buyers to come in. Try once, try twice, and use a bull trap. Now notice, the bear trap down here, I want to get in below that low. The bull trap, I can be a lot more aggressive. Bull trap on the way back lower. Now, as we make our way back to retest that low, if we're lucky, we'll get an add-on trade. Add-on trades are very specific. I want to see a shallow pullback, that 21 EMA, a lower low in price. Remember, very important, it needs to barely miss that moving average. Lower low, that creates our add-on for retest of that low. So again, it's a bull trap, it's an add-on, and the target goes back to retest that low. Now here's where it all comes together. Anyone who sells on that pullback, where is their profit target? Down to retest that low. Sellers up here become buyers down here. If you watch these videos often, you know how much I love retest trades. Because now, as this thing retests that low now, I can almost guarantee a lot of inexperienced traders are going to chase this thing going lower. They're not going to have the guts to sell high. They're going to chase it as it goes lower. And once those bears get trapped in once and twice, now notice, I can be a lot more aggressive on this buy. I can't be too aggressive on the crown reversal pattern because again, it may keep on going lower. But once I know where that bottom is, now I can trap in those bears, use a simple bear trap pattern. Now, very important, where's the market want to go? It wants to go back up and take out that high right there. Very important now, look for the add-on. Remember, it separates off that moving average. It's a higher high in price, and we're buying right below that low. Key targets come off here at the retest of the high. So again, I mentioned earlier, there are 3 types of setups I look for in these specific types of situations. One of them is a retest trade. It's a crown reversal off the low. Remember, half size, quarter size on the crown reversal. It's a bull trap. It's an add-on. Targets come off on the retest of that low. Then we trap the rookies in with a bear trap pattern and we look to get that add-on. Remember, that separation away from the moving average for that run back higher. That's one of 3 trades or 3 setups I'm watching for tomorrow. Now, the second one might be the easier one. The second one now is a trading range. Ranges are some of the easiest ones to trade because ranges love to rotate. So if we start going sideways here overnight, which could easily happen because everyone's waiting on more headlines out of the tariff talk. Remember, we're not a bear market overall. We're a bull market overall right now. So if I get that range, remember that range will act like a magnet. And ranges, they love to rotate using symmetry or pendulum swings, as we call it. The amount above, the amount below, the amount below, amount above. We use triangles. We teach this stuff inside our free trading classes, right? So range. There's 2 ways I want to trade this. One would be basically a bear trap down below that low. Now, it's that same bear trap pattern. It's bears trying once, it's bears trying twice, and as we squeeze those stops, think about this. The reason why I want 2 tries is I want to get those stops to get run. If you're caught short and you get stopped out, you have to buy your way out of that position. That's why I love bear traps. Again, overall bull market, at least for now, on the hourly time frame. And remember, after that bear trap pattern starts making you money, don't just sit back and relax. Keep the foot on the gas pedal. Look for that separation of the moving average, that higher high in price. I'm going to get that add-on trade right in off of that low. Now, this is where things get fun. The amount below the range, the amount above the range, that creates a target for us. A lot of times though, because we're an overall bullish market right now on the hourly time frame, we're going to break out of that trading range, convincingly break above that pendulum swing. Then we look left and we can now start using that trading range now for a breakout pullback. When I think breakout pullback, I always look for a two-legged pullback off that low and a move going higher. Now, I want to talk about this breakout pullback in a bit more detail. Before I do that though, let's slow down for a second because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy for you. Don't you worry though. I teach this entire roadmap. In fact, I have a ton of examples of bull traps, bear traps, lots of add-on trade examples. Guys, I want to help you time better entry this stuff, make more money with this stuff. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you. And also, too, guys, keep in mind, too, I'm going to put all the important links you'll need to learn the strategy, time better entries, make more consistent profit. I'll put all the links you'll need to learn the entire strategy in the description of the YouTube video. Start there first. Take that free video course. Most folks start making money all on their own, all from the knowledge I share in that short video series. Start there first. And don't forget too, if you're on Twitter or X, they call it these days, I post a ton of charts and videos and updates on Twitter X of the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, are linked up for the description of that YouTube video. Okay, so now you know where to learn all the entry tactics I'm talking about tonight in the video in case you're watching here for the first time. Where we leave off here, yes, the range scenario right now. We talked about going lower, bear trapping in, getting that pendulum swing and jumping and running higher. If I can get that convincing break of that pendulum swing, then I start watching for a two-legged pullback. Think about a measured move. 1 leg, 2 leg. Now, you know me. I'm not going to blindly buy that low. What I'll do here is look for price to get below that 21 EMA and trap those bears in. Bear trap. 1 try, 2 try. Now, remember, whenever we talk about bear traps, whether that be below the range, it's always a higher high. It's always a higher high. And again, we teach these small details in that free video course I mentioned earlier. So make sure you grab the link in the description of this video. That bear trap now, I can then look for those stops to get run. I can now look for that run going higher. And again, I cannot emphasize enough how important it is to watch out for those add-ons. After that bear trap starts making you money, look for that separation, that higher high in price, and right below that low is now the add-on, and we're going to go back up into that big range we left off earlier on here this morning. Let's talk about one more type of range play. Again, I said earlier, there's 3 different ways to trade this scenario. One is that retest trade. The second one is the range play. This is one way to play the range. But let's talk about one more thing here, though. What if we go sideways overnight here, which again is very likely ahead of tariff talk tomorrow morning and the deadline next week? What if we went higher first and then rolled down from there? Good question. This is now where I can use that same bull trap pattern, right? Buyers try once, buyers try twice. Once they try twice, now remember, it's 2 tries, lower low. Why lower low? Because buyers want to buy low. Rope those buyers in, use their stops to fuel that move lower. And again, now where does the market want to go? It wants to retest that low. More importantly, it wants to rotate the amount above, the amount below. We start running back lower. We trap the bulls in with a bull trap of those highs. We then add to our winner with that add-on key separation off that moving average, lower low in price, and we take our final profit targets off at that low. Now, I'm going to warn you right now, this will feel very scary. This will feel very, very bearish. But as I mentioned earlier this week, the best trades are almost always scary. They're uncomfortable. This is a horrible spot to be selling, which means it's a great place for, you nailed it, a bear trap. Bear trap, 1 try, higher high, 2 tries. Why higher high? Because sellers want to sell high. If we're selling something, we want to sell at the highest possible price, right? It works that way in the markets as well. 2 tries, bear trap, and again, watch that rotation going higher. Watch that add on as we go, and we're rotating back and forth, up, down, back and forth we go. That is our second scenario, second strategy for tomorrow. Third one now is over on the Nasdaq. Let's go to the Nasdaq here right now. Nasdaq is in a very similar case here to the S&P 500. You can see right away we had that bullish range over quad witching last week, that rotation going higher. That gave the buyers clear control here of the overall momentum. That's a very big clue, right? Now, let's dive into our tick charts. Before I do that though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days, and I appreciate you guys coming out and watching my videos here every evening. So thank you so much for the likes, all the ongoing support. Now, over on the Nasdaq chart, we know we're bullish overall on the hourly. And again, this monster move going lower here after Trump announced 25% tariffs on autos starting off on April the 2nd as well. And again, this scenario with all of that momentum is going to want to pop up, retest that low before we resume the overall bullish momentum. That was the retest trip we talked about earlier on the S&P. Also, too, ahead of tariff announcements the rest of the week this week, we may also see this thing go sideways in a range. I talked about bear traps below, bull traps above. I mentioned if we can get a breakout of that trading range, we then look for breakout pullbacks, right? Relatively simple idea there. And again, I love range-bound markets. They're so easy to trade once you learn how ranges rotate. Those are 2 out of 3. The third one now is a V-bottom. There's a very good chance here right now, because the markets are so volatile right now, a very good chance, big move up, big move down, and big move back up. All it takes is one whiff of some good news regarding tariffs, or maybe not good news, but all it takes is a little bit less bad news right now, right, about tariffs to run this thing going higher. But how do we know, right? A V-bottom on this, V-bottoms are the most challenging types of markets to trade, because we know all that momentum is going to try to retest that low. So here's a big question for you. As we go higher here, how do I know when to buy it? And how do I know when to sell it? Well, it all has to do with the moving average. For example, if we pop up here right now and we start pulling back to that moving average and we see buyers trying once, trying twice, that's a bull trap and a retest of that low. But if we pull back to that moving average and we miss the moving average, see, there's that separation I keep on talking about, right? Separation. If we start separating off that moving average, right? And you'll see it. It'll be slow. It'll oftentimes pop up and start slowly grinding higher. These V bottoms can be very tricky, because what's going to happen is that voice in your head is going to tell you to jump in. You're going to want to jump in and chase after it. But once you start seeing that separation, the goal is to get in underneath prior swings. So write this down. Anytime I see a V bottom like this, I want to get in underneath prior swings. I have to assume that sellers are going to try to whack that thing back down again. But again, if we get separation above that moving average, that probably isn't going to happen. So don't buy high up here. Don't walk right into those bears. Let those bears whack it running lower, get underneath some prior swings. Then we look for nice strong green candle closing back above that moving average, or my favorite is always a bear trap. Let those bears come in, try once, try twice, higher high in price, and squeeze those bears running higher. Makes sense, right? If we're lucky, we can draw a trend line off that high, off that low, and combine below that prior swing, the low of that channel. Boy, that would be a fantastic trade for tomorrow. So again, be very aware of what it looks like on the pullback. Do we pull back and then pull back to that moving average and buyers get stuck once, twice, back down again? That's a bull trap. But again, if they start grinding and separating away from that moving average, and again, it'll oftentimes be very slow, It'll be very painfully slow as it grinds up like that. We don't want to chase after it. The idea would be mark off the highs, bring it down off that low, look left, find one of these prior swings and jump in on that first test below that channel. It could be a bear trap, like I'm showing you here. It could be a 2-try failure, like you guys learn in our free video classes. Failure pattern, pullback combination pattern. Remember, the market wants to go back up into that range up overhead. The range, of course, on the Nasdaq, also on the S&P there as well. So a third scenario for tomorrow is a V bottom. Pay very close attention to as it pulls back. How does it react to 21 EMA? That will tip us off to whether or not we're selling a bull trap back down again or looking to buy that bear trap off that low and that squeeze running higher. Those are 3 trades for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets, come out and join us every morning. Come learn along, trade along every morning at the opening bell. As always, I'm going to put all the important links you'll need to learn the strategy, join our trade room, start making more consistent profits each day. I'll put all the links you need in the description of the YouTube video. Start first on that free video class. Enjoy all the trade examples I share in that. Then come join in my trade room and we'll do it all together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.